Welcome back. You're watching Market Masters. With us is Mark Mobius, author and billionaire investor, on his latest book, Book of Wealth, A Young Investor's Guide to Health and Happiness. You know, Mark, coming back to the India scenario, there are, of course, a lot of things which affect the sentiment in the markets. And currently, there is a certain degree of volatility, a decline in the Sensex and Nifty that we've seen because of Indian elections. That is what several experts suggest. Do you think this volatility is indeed due to elections, or are there other factors at play? How should investors see this?
I think there's no question the elections are having an impact because people do look at the elections very carefully. Everyone is involved emotionally in one degree or another, and they tend to react emotionally in the market itself. So now there's an opportunity, because if you can look at the emotion in the market and recognize that perhaps the emotion, the direction of the market driven by emotion is wrong, then you should do the opposite thing. In other words, if everyone's selling, maybe you should be buying, and vice versa. Of course, based on the fundamentals, on the actual fundamentals of the companies in which you are investing. So yes, I would say that for India now, probably the Indian elections are having a big impact on the emotion of the market.
Right. We've seen at least 47,000 crores offloaded by foreign institutional investors since the time the elections began in India in April. Approximately $6 billion have been offloaded, Mark. What, according to you, would be the reasons for this?
It's probably because the uncertainty arising from the election. A lot of investors, not only foreign investors, but investors anywhere in the world, including Indian investors, tend to hate uncertainty. They don't want it to be uncertain. And of course, as you mentioned, the outcome of the election is uncertain. You know, some people say that Modi will get a supermajority and that he'll be able to get more seats in Congress. Other people say, no, he may not. And that creates uncertainty. So whenever there's uncertainty, people say, okay, I'm out of here. I'm going to wait until I find out what's really going to happen, and then I'll invest. So uncertainty is a big, big driver to this, and that's probably what's happening with foreign investors.
Right. Let me ask you about 2 to 3 scenarios. One is, if the Prime Minister, the BJP, the NDA, they cross the 400 seats mark, as they have been suggesting and claiming that they will win big, they will win with record numbers. If they manage to do that, how do you see the markets reacting, and what will be the growth momentum and investment momentum and attitude towards India?
I think if they do that, the market will probably do well, probably move up, barring any other factor coming in. But I would say it would be good news for the market. And more importantly, it would be good for the economy, because then the policy objectives of growth and the adoption of technology will be very important. One of the key aspects now for India will be its ability to attract foreign technological investments, semiconductors, software, etc. There's an incredible opportunity for India to become the center for technical innovation and technical manufacturing. And that will depend on the degree to which the Indian government is able to attract these large manufacturers from China, from Taiwan, from US, Japan, etc. And that, of course, depends on the degree of bureaucracy and restrictions that the Indian government imposes. And my reading is that the Modi government will probably try to make it more attractive and loosen up these restrictions, which will attract more foreign investors.
Right. What if the government, the BJP or the NDA, altogether get the same numbers as last year? They don't get the 400 seats as promised, but they end up around 350, 353. Just the same number as last year.
Probably the market will move sideways. You know, there won't be much excitement in the market. And the market, as you know, has gone up quite a lot. So there probably could be a correction along the way. So that won't be as good news as if you had a better election result.
Right. And what if they end up with less than the number in 2019, somewhere between 250 to 300 seats? How does that impact the sentiment in the market and the growth trajectory and the attitude towards India?
Bad news. The market will probably not do very well. There'll be a lot of negative sentiment, unless, of course, unless the opposition parties, Congress comes in and say, look, we're going to adopt a market-oriented, technologically oriented administration, and we're going to adopt new technologies. We're going to digitize the economy, following Modi. Then you're going to get a different scenario. But initially, it won't be good news.
Right. As you've also said in your book, there are periods of uncertainty in history, and elections are, of course, a period of uncertainty. So how should investors see this? One thing is to gauge the sentiment, follow your instinct, be knowledgeable about what's happening. But if you're not able to gauge the situation well, what should an investor do at the moment in India, or ones who are looking at India right now?
I think the key thing is to look at the individual companies in which you're interested. The companies that have good earnings numbers, high return on capital, and so forth. And look at these companies and ask the question, how will a Modi administration getting stronger or weaker or staying the same affect this company? What will be the outcome? In many cases, you'll find there'll be no difference. The company will continue to operate. There'll be no big change in its operations, sales, so forth. In that case, if the price goes down, it'd probably be a buying opportunity. So I think at that stage, in these periods of uncertainty, again, you have to move rationally. In other words, look at the individual companies and rationally assess what impact the political environment will have on this company.
Right. You have been a bull on India. You have said that you've been following tech stocks in India very closely. Recently, you told us that your top stocks were Tips, NetWeb, Vari. If I were to ask you right now, what would be your top picks in India? Any other companies or sectors that you're following closely? What would those be, Mark?
No big changes, but I can't tell you that because we may be in the process of buying. So, but no big changes.
All right, no big changes. Any large sectors that you would remain most bullish on in India, irrespective of the election outcome?
Companies that adopt technology. By the way, it doesn't mean that it is software companies or hardware, computer hardware companies, but I would say companies that adopt new technologies to improve their profitability. Those are the companies you want to focus on.
Right. My final set of questions, when it comes to India, irrespective of who is elected, what are some of the reforms that are needed, according to you, in India? Because we are trying to be an alternative to China. You've also said that in many ways you prefer India to China, but those capital flows are right now not coming to India. What are some of the reforms that we need to make sure that we attract those funds?
First and foremost, the paperwork and the approvals necessary to make investments into India have to be simplified and lightened so that companies can bring in capital with the guarantee that they'd be able to bring it out again in the future. That's very important. So agreements and terms and conditions have to be simplified in that respect. That's number one. Number two, it's very interesting that there is competition from the different states in India. Some states have different rules than other states. The degree to which the states can come together and agree on common rules regarding foreign investments would be quite beneficial for the country as a whole, because then companies could have multiple locations in the various states. Some of these companies are very big. They have to be in multiple places. They want to be in multiple places. Take advantage of the opportunities for workforce ability. So I think this would be another important reform. So in other words, a more unified system between the states in India. So I would say those are the two things: simplification and unification.
All right. The US has slapped additional tariffs on China, almost 100%, not almost 100% on electric vehicles coming in from China, 25 to 50% on semiconductors, solar cells. How do you think this is going to really pan out for global markets? Because clearly there will be escalating tensions between US and China, and the trade wars could worsen.
Well, again, this is where India comes in, where India will benefit from these changes because suppliers, the supply chain challenge for American importers is getting more and more difficult. And they need to find new sources of supply. Where can they go? What other countries have a billion population, a workforce of a billion people? It's India. So Mexico is benefiting, by the way, a great deal, but I think India could benefit again, provided that the Indian government simplifies the investment process.
Thank you very much, Mark. We've come to the end of this special interview. But thank you very much for leaving us with takeaways from your book, The Book of Wealth, A Young Investor's Guide to Health and Happiness, and also telling us about the tips that young investors must keep in mind while getting into the stock market, and also about the trajectory of the Indian stock markets here onwards. Thank you once again for being with us.